Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Blue Owl Credit Income Corp, and it's not about owls or bird watching unless you consider watching where your money flies to a hobby. This filing reveals that they've increased their borrowing capacity. Essentially, they've taken out a bigger loan to do more lending. So how big is this loan and what does it mean for investors? Let's find out. Before we get started, if you enjoy getting straight insights from corporate documents, make sure you are subscribed and join the Discord community linked in the description below for more discussions. This report is called an 8K, and it's basically a snapshot of important events that a company needs to tell the SEC about right away. This one is dated April 29, 2025, which means this information is pretty fresh. The main event here is that Core Income Funding v LLC, which is connected to Blue Owl, made some changes to its loan agreement. Think of it like this: they went back to the bank and asked for more money. This amendment or change is to their existing loan and security agreement. This agreement in its original form was made on March of 2023 and has been updated a couple of times since then. The big news is that they've increased their total borrowing power from $500 million to $750 million. That's a substantial jump, meaning they have a lot more cash to play with. There are a couple other updates. First, the minimum equity amount was changed. Without diving deep into that, it means that the lender is changing the amount of assets Core Income Funding needs to have to make sure they can pay back the loan. Second, the fee they pay if they don't use all the money they borrow, called the non-usage fee, is now between 0.5 that of the money during what's called the reinvestment period to get that rate. This part is just confirming that what they talked about earlier creates a direct financial obligation. In simple terms, they're on the hook for this new bigger loan. If you're super interested in the details, you can check out the actual agreement, which is included as an exhibit. So what does all of this mean? Well, Blue Owl is in the business of lending money to other companies. By increasing their own borrowing capacity, they're essentially betting that they can lend that money out at a higher interest rate than they're paying on their own loan, making a profit on the difference. This could be a good thing if they're smart about who they lend to and the economy stays healthy. More lending means more potential profit. However, it also means more risk. If those companies can't pay back their loans, Blue Owl could be in trouble. In my opinion, this report is a mixed bag. The increased borrowing capacity shows that Blue Owl is confident in its ability to generate profits through lending. It also signals that they are willing to take on more risk to achieve those profits. One risk is that if interest rates rise, Blue Owl's profits could be squeezed. Another risk is that if the economy slows down, more of their borrowers could default on their loans. However, if Blue Owl manages these risks effectively, the increased borrowing capacity could lead to significant growth in the coming years. Ultimately, whether this is a good move or not depends on how well Blue Owl manages the increased risk. Alright, that's our breakdown of Blue Owl Credit Income Corp's latest filing. What's your take on these moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also, don't forget to check out the Discord in the description below where we discuss these filings in detail. Thanks for watching, see you next time.